Welcome to the InterMarket Analysis video update. This is being prepared for May 30th, 2022. It is Memorial Day weekend, so this will apply to Tuesday, May 31st. First, we'll look at the S&P 500 valuation. We had been coming down closer to the 20 PE, but with the advance that we saw last week, we've now gone back above that. And on a trailing 12-month basis, we are now considered expensive. Looking down below, this just shows the difference between the S&P and the red line that shows the PE of 20. Also, looking back historically, other times when we have become really overvalued, that has often led to a negative event in the markets, where currently we're coming back down, but we're still considered to be expensive overall. Looking at growth versus value, the peer growth index is still in a downtrend, where the value index is in an overall uptrend. When we compare the two, growth is seeing a real decline, although it has recovered recently, where value has been really in an uptrend, but it has shown recent weakness. Another way to look at growth and value is to look at the index. This compares the growth index of the S&P 500 with the S&P 500 peer value index, and this creates a ratio where for a long time growth was really outperforming. We had a little bit of trouble in 2021, came back up, but now growth is declining, even though it did advance this past week. Looking at an inverse chart, we see that value had been underperforming, but since the beginning of 2022, it is outperforming, although recently it's showing some weakness. Another way to look at this is looking at some ETFs. We had the SPY Growth ETF, which had been outperforming the SPY Value ETF, but now the Growth ETF is underperforming. Here's an inverse of that, looking at the S&P 500 Value ETF, which had been underperforming, but since the beginning of 2022 is continuing to outperform. Looking at the growth index against the value index, it just shows where we're in an overall downtrend with growth really underperforming. The same story that we've seen pretty much for the whole year. Looking at some index ratios, first we look at the CRB index, and it just shows that it was up a little over 0.5% on Friday and still continues to be in a pretty solid uptrend. Looking at the CRB, or commodities, against the S&P 500, where commodities had been underperforming, we started to flatten out and go slightly positive in 2021, while in 2022, the CRB, or commodities, have really been outperforming, even though we've seen some recent weakness. Looking at the S&P 500 against the CRB ratio, where the S&P had really been outperforming for a long time, we flattened out in 2020, went negative in 2021. The S&P has really been underperforming the CRB index, but it's showing some recent strength. Looking at the NASDAQ 100 against the S&P, these are the biggest stocks in the NASDAQ, and they've been really underperforming, although last week we saw a bit of a bounce. Looking at some other stocks, here's the S&P 100, which shows that it's really underperforming the S&P 500. Low volatility stocks. This is an ETF that you can get into, and it doesn't mean that these stocks necessarily go up. They just go down less when the overall market is having some difficulties. And here's a ratio between the two, where the low volatility had really been underperforming up until the beginning of 2022. Now it's outperforming, even though it is showing a bit of a pullback. Another thing to look at is called the Dow Jones Composite Average. This takes the Dow, the transports, and the utilities and puts them together, and we've been in an overall downtrend here, although we have seen some strength recently. Another thing to look at is Dow theory. Here's the Dow on the top. When that's going up, we also compare that to the transports, which lately have also been going up. I also include utilities when I look at Dow theory, and it's also been bouncing up as well. And utilities have had a pretty good year in 2022. This is a longer term look, and sometimes we can look for divergences, either positive or negative, but they're pretty much all moving together right now, with utilities having performed the best. Looking at bonds against stocks, here's a total bond ETF. This is put out by Vanguard, and it had been doing quite well through 2019. Then into 2020, it did down like everything else during the COVID plunge, but then quickly recovered and had been performing quite well. Then we get to 2022, and bonds have really been having some problems, although we're seeing a bit of a bounce back. And as bond prices go up, interest rates go down, and vice versa. Looking at corporate bonds, this is just price. The bond index by itself has really been in a downtrend, although we have seen some recent strength. When you compare the S&P to the 10-year Treasury yield, it just shows that the S&P has been really going down when you compare it to interest rates. But lately, we're seeing the S&P bounce up and interest rates have been declining. Junk bonds. This is a junk bond ETF where it has been in a downtrend but has been bouncing back. We're getting close to the 50-period moving average, and we actually closed slightly above that. Here's a ratio with the S&P on top. Here's the junk bond ETF and a bond ETF on the bottom, and it just shows that junk bonds have been outperforming regular bonds because regular bonds have really been having some trouble. But junk bonds have been having trouble because they tend to follow what the overall market is doing. Looking at the S&P against some other sectors, the energy sector, which had really underperformed for quite a while, continues to outperform in 2022. This has been the strong sector to be in. And if you got in right at the beginning, you're looking at some pretty good advances. Here's the tech sector all by itself. It's a huge part of growth stocks, where we had been doing quite well for a long time, but we ran into some trouble in late 2021, and for 2022, we've been really underperforming. We're below the moving average, but we have seen a recent bounce. The semiconductors, this is not a sector, this is just an industry group, but we like to look at this because it plays a big part in the tech sector overall, where it's been in a downtrend, but seeing some recent strength. The tech sector against the S&P just shows that the S&P has been outperforming as techs have been underperforming, but seeing a little bit of a bounce. Some other areas to look at are growth ETFs against the 20-year bond. And growth has been having trouble, bonds have been having trouble, but growth has been doing even worse until lately. It's been spiking up a little bit. The 10-year Treasury yield against tech, this just shows that the 10-year Treasury had been declining up until 2022. Now we see interest rates really advancing, and they've been outperforming the tech sector, but we're seeing some recent weakness as tech has been going up and interest rates have been going down. This is an inverse of that same chart, just showing where the tech sector had been really underperforming, but is bouncing back as of late. Looking at staples, the things you have to have against discretionary, the things that just make life interesting, staples have been really outperforming, but have shown some recent weakness. Here's an inverse of that same chart, showing how discretionary has underperformed, but has seen a recent bounce. Energy against tech. Energy's been really outperforming tech. Tech was the place to be in 2018, 2019, and even into 2020. But when we hit 2022, energy has really started to outperform on a relative basis. Looking at gold against the S&P, a lot of people really watch this, where gold has been outperforming the S&P, but it's starting to show some weakness recently, but it's still in an overall uptrend. Looking at gold against the dollar had been doing really well, but last week saw a real decline. So we're seeing an advance in the gold to US dollar ratio. InterMarket Analysis. This just shows that oil has been performing the best going back to the beginning of the year, followed by the dollar, which has been doing quite well. Gold has been up slightly. The underperformers have been stocks. Here's the S&P, but it is trying to turn up. And bonds, based on price, have been flat, but they're trying to bounce a little bit. Looking at some correlations, this just shows you how these things interact with each other. We have the S&P 500 against the 10-year. Usually what happens is the S&P goes up and interest rates are going down, and vice versa. If interest rates are going up, the S&P is going down. When they have an inverse relationship, this registers a real low value. The closer it gets to 1, the stronger the inverse relationship is. Well, what we were seeing throughout May for a while was that the S&P and interest rates were going in the same direction. And the reason why I bring this up is we've gone back more to a neutral relationship lately. Another thing that I haven't pointed out before is the S&P relation to oil. And a lot of times when we see oil going up, that also gives strength to the overall market. Oil prices have really risen, and that relationship hasn't been as strong as it has been in the past. However, recently, we're seeing oil prices going up and stock prices going up in a closely correlated relationship. Then we look at tech, which has been really weak, against interest rates, which have been really strong because they've been going up. They had been moving in a real inverse relationship, only to switch back to almost a hand-in-hand relationship, but lately this has gone back to neutral. What is our outlook? Nothing has changed if you watch these videos on a regular basis. The areas that were positive continue to be positive, even though they've shown some recent weakness. The areas that have been negative continue to be negative, although they've seen some recent strength. Not enough to really change the overall environment. So thank you very much. I hope you found this useful, and I'll prepare the next intermarket analysis video next weekend.